going into our afternoon and then into the end of the week. And we have a pretty incredible moment here inside of our markets where the Fed fund futures have shifted one of the largest swings that we've seen in most recent history. And let's just do a real quick refresh here and see what it has changed during the doldrums. You'll notice here that we are in an environment here where they're not pricing in any cuts here now until all the way into September of 2027. And it actually, interestingly, had a couple of rate hikes in at the end of 2027 here as we were going into our morning. And now it has just blown into full-on crisis at some point in the future, the end of 2027, where the Federal Reserve will have to cut interest rates down to 2.50 to 2.75. That's what the Fed fund futures are pricing in. So not even that they're going to have to fight inflation or that they're going to come into an environment where there's actually just going to go straight into a crash. I mean, that's what that looks like, historically speaking. So that's kind of an amazing revelation when you're just looking at Fed fund futures. That means that, the indices have much further to fall before they price this in. It really is very much like, and I'm going to take you back in history here, take you back to a moment where we were. I'm going to get rid of all these drawings here, most recent drawings, so we can get viewed in on this. We were coming out of 2024 going into 2025, and we had hit a bunch of profit targets on the weekly charts. I'm going to just take you back and show you what this looked like. So there were extension long levels that we were in 2024, and 2024's extension long levels completed, and then the new 2025 highs to highs extensions. You'll notice here is that they defended once. I'm just going to take this setup off here. And so there's one extension that we had, the very first extension in our series. So we were in extensions of extensions of extensions. And we completed a profit target up here as we were coming out of the middle of December of 2024. And then we broke the next extension. And this is when all of the tariff panic was going on. Well, we broke the extension. And there's two different ways that a market will change trend after an extension failure. Sometimes we'll just break a 61.8% line and then just tank from the new traditional short setup. And there was participation inside of that setup, and then it blew out and it broke. But we ended up having a sell-off into was after the trend break, we had this little beach ball underwater moment where everybody was essentially selling this low down here. And if I remember right, it was a Friday, Monday, and the markets ripped right back up into the second way that they sell off after a trend break. They make double tops. And this is in that window where the Federal Reserve had started cutting interest rates. And we have this study on the website. It's actually free. It's not behind a paywall or anything. And I was trying to get this information out that over the last, it's a study of the last 14 Fed rate cuts or rate pivots, because they do a pivot in forward guidance, then they do the cut. And if you study going back all the way into the 1940s, after they do the cut, there's on average of an 11.07% rally. And then afterwards, there's on average a 22.2% decline. Well, interestingly, from September 18th, this stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.